This video guide explains how faculty can check the revenues generated by their department on the one hand and the budget allocated to their department on the other. This portal was prepared by the Budget Council of the UF Faculty Senate between 2014 and 17 with the assistance of the CFO's office and the budget office. The guide has been prepared by Meera Sitaram, who is a Faculty Senate member of the Budget Council. So the links for the transparency portal and the guide can all be found on the Budget Council page, which is here, and some of them require GatorLink login. The guide is divided into a few parts. The first is a motivation for why a faculty member should know the difference between the revenue generated by their department and the budget allocated to the department. It continues with a way, the formula that is used by the UF to determine the revenue generated by departments and the different revenue streams that come into the university, and followed by the actual video walkthrough of the snapshot of tuition revenue by department, which is done once a year, and the most recent version we have is from 2015, followed by the department major correspondence chart, which is a portion of the information required to actually compute the tuition revenue, and finally the allocation and expenditure portal, which is populated instantaneously from the university financial cube. But one good reason why faculty should be informed is because they're supposed to participate in shared governance according to the university constitution. Shared governance also is mentioned in the collective bargaining agreement. These are links, so if you're looking through the slides, which is also available at the Budget Council page, you can actually click on these links and go to anything that's underlined as a link. Another reason is that we are public university faculty and we are held to a high standard of public duty. In particular, we have to recognize that promoting the public interest and maintaining the respect of the people should be of foremost concern, and not least among this is understanding how the money flows through the university. Finally, the Constitution, UF Constitution's Article 5 actually talks about faculty duty as part of the Budget Council and any other such body at the college level and potentially at the department level as well, that collecting and disseminating the information about university budgeting and planning is one of the jobs of such a council, and so that faculty can monitor whether the allocation of resources to their department or whatever their department-like unit is consistent with faculty senate actions or their college council actions and the university's long-term and short-term strategic plans. Previously, the kind of data that was open and available was easy for an accountant to understand, but not to faculty. These are the links to those two tools. The first one is called the Financial Information Tool, called the FitCube, and there's another that's maintained by the Institutional Research Office, which is called the Tuition Revenue Cube. Another reason to have department level data is that faculty are able to relate to the data in their own department and able to cross-check the department. For example, one of the pieces of information that goes into the formula that computes the revenue generated by a department is the major code that correspond to a particular department. And it's people in the department that know best which majors their department offers. So if there's any mistake in the institutional research data, faculty are best able to correct it, look at it and correct it. So the data should be transparent to faculty. And also, by making the data easily accessible and transparent to faculty, it helps them curate department level institutional data, which someone sitting at the institutional research office may not otherwise be able to curate. Finally, it permits faculty to monitor whether the allocation of resources is consistent with shared governance actions and the university's articulated long-term and short-term strategic plans, as it was mentioned earlier as part of the Budget Council's charge. Going to the financial overview, the different revenue streams that come into the university are probably the first thing to understand. Here, the arrows, the thickness of the arrows in some sense represents the size of the revenue stream that comes into the university. So we'll go through these revenue streams a little bit at a time, because by the time we're done, this page will be filled with squiggles that describe how the revenue flows into the university and gets allocated to departments. So the tuition revenue is the largest stream that comes into the department. The next largest stream, more or less, is the general fund supplement, or the state appropriation, that comes into the university. Other revenue streams that are significant are the direct cost allocations on grants, the indirect cost allocations on grants, which the university negotiates typically with the federal government or any other granting agency, which is a percentage of the direct cost, and other intellectual property type revenues that come into the university. Most of these come in through individuals, this comes in through departments, and this comes in directly to the university. The other revenue streams are, for example, the spendable donations. So endowments cannot be touched, but they generate interest, and the spendable amounts are available for people to spend. These can be, again, generated by individuals, departments, colleges, or university. And there's off-book instruction, which is instruction that doesn't fit the usual mold and doesn't enter the tuition stream, but is available in a freer way for departments, colleges, etc., to generate and spend. Finally, there's an interest, which the university accrues on the cash on hand, and that is usually goes to the university. That can be a significant amount, such as, I guess recently it's $30 million a year. We can go through each one of these revenue streams a little more in detail. The education in general includes both the state appropriation and the tuition. In particular, the tuition is entirely generated by departments, and the state appropriation, of course, comes to the university through the university. The one thing to note is that in this guide, when colleges mean college-like entities under the university, and departments mean department-like entities under the college. For example, centers under the university or institutes under the college. What happens to the revenue, tuition revenue and state appropriation or the general fund supplement that comes to the university? It gets allocated to the colleges, and it gets allocated to colleges using the recent model was instituted in 2016, and it computes the ENG, or education in general, allocation to colleges by adding up the general fund supplement and the tuition generated by all the departments of colleges, and subtracts from it a small amount that corresponds to new out-of-state only undergraduate tuition revenue, and it also subtracts all the support that the college receives from the university, such as registrar, facilities, and so forth. So this is used to determine how much each college gets out of this particular revenue stream, namely ENG, which includes the general fund supplement from the state and the tuition. Eventually, the colleges distribute that to the departments using whatever the dean decides to do. We'll talk about this later. So now, This is a little more detail about how the E&G revenue stream is computed and allocated. So the base GF, General Fund Supplement allocation to the college, was taken to be simply the 2016's General Fund Supplement without any changes. It was held harmless. The college's tuition revenue annually is computed as 70% student credit hours generated taught by the college's department. So this is the teaching portion of the revenue, student credit hour revenue, and 30% of the student credit hours taken by the majors that are attributed to the college's departments. The student credit hour revenue has 4 different levels of tuition. So in other words, the student credit hours are multiplied by different dollar amounts depending on whether it is an undergrad lower, undergrad upper, grad lower, and grad upper. Roughly speaking, lower division, upper division, masters, and PhD. And from this, this tuition revenue generated, proportional support and facilities taxes are subtracted. So altogether, the E&G allocation that the university allocates to a college for a given federal year, X, is the base GFS allocation, which was whatever the 2016's allocation, the general fund supplement, the state part, held harmless, plus the tuition for the previous calendar year that was generated by the departments of the college. And from that, we subtract this amount that goes into the provost part, which is essentially any increase in enrollment of undergrad out of state students. That portion of the tuition, which is a relatively small percentage, that goes directly to the provost. And from this amount, which is the E&G allocation to the college, the support and facilities are subtracted. So whatever facilities the college uses and whatever support it needs from the registrar and other people, that's subtracted by the university. So this amount comes to the college. One thing to note is the GFS allocation may not stay as the original 2016 allocation if, for example, the state appropriation changes, total state appropriation changes. For example, we could receive raises or we could receive cuts. In both cases, the total GFS allocation, if it changes, then the GFS allocation to the college will proportionally change. So, and the other thing to note is that since the GFS allocation per college is not exactly clear, an easier way for a faculty member to compute how much the allocation to the college changes from one year to another would be to look at the E&G allocation for the previous year, add to it the tuition revenue from the previous year, and subtract from it the tuition revenue from the year before that. So this is a better way for a faculty member to just compute what the change in the E&G allocation to the college is based on the change in the tuition SCHs that have been generated by that college between one year and another. So one thing to note is that although the E&G allocation to colleges follows this exact formula that we talked about in the previous slide, the E&G allocation that the dean might make to the departments within the college may not follow this formula. So it's the dean's prerogative. So together, by knowing the tuition revenue that your department generates and by using the transparency portal, which we'll come to, both of these we'll see in a minute, that shows what has been allocated to a department, will tell you what the gap is between how much your department generated and how much was allocated. So this makes it very clear how the dean's allocation subsidizes some departments and how other departments are the subsidizing departments. So this helps faculty monitor. This is natural that there are some departments that are subsidized and some departments that are subsidizing, but it helps faculty monitor whether the college's stated long-term strategic plans are consistent with what the dean is doing in terms of allocation. The next revenue stream of interest is grants. So in general, these are generated by individuals. The grants, the direct cost goes directly to individuals. The intellectual property, we will see what the proportions are in terms of how it goes to individuals, colleges, departments, and so forth, and also for the indirect cost. The way they are allocated is most of it, of the indirect cost, essentially goes to the college to be distributed to the departments. A portion of it, a certain percentage, a significant percentage, ends up at the university, whereas the direct cost on grants go directly to the individuals to spend whichever way they budgeted. They made the agreement with the funding agency when they wrote the budget for their proposal. So in particular, the indirect cost, the weights distributed between the university, college, etc. is as follows. So university administration takes different percentages depending on whether the college has been declared a tier 1 college, a tier 2 college, etc. You'll see it in the next slide. And the college decides what the department gets. It's supposed to be at least 7.5%. Some colleges give more than that, and others just that. And the individuals are supposed to get at least a 10% share of the indirect cost that's generated. So if, for example, an NSF grant generates approximately 50% of the direct cost is indirect cost, of that 50%, 10% will be, so that's about 5% of the total amount of the total direct cost will end up with the individual. And some departments might choose to pool this and use in the department. Some colleges might pool it and use it as part of the college. So this depends on the particular agreements at the department and college level. And the college administration keeps all the amount that's not taken by the university and not given to the departments and individuals. So this is the tier structure. So 36% is taken for those colleges from the university takes 36.8% from those colleges that are high research intensity, and little or no additional resources to support research infrastructure. Tier 2 are when they have some additional resources to support research infrastructure and so forth. So the tier 1 colleges are these, tier 2 are these, tier 3 are these, and tier 4 are these. This entire slides are available at the Budget Council page, so you can check this. So how is we saw how the E&G revenue was allocated, and we also saw how the grants, indirect and direct, was allocated. Now this shows how the intellectual property is allocated. Some of it goes to the university, colleges, etc. This is technology and licensing and other type of intellectual property generated by faculty. So if the total, this can be found at the collective bargaining agreement and also in the UFIP policy. These are links in the slides that you can click. Other revenues are spendable donations and off-book instruction, for example. They are allocated into university, colleges, departments, depending on, this is very varied, depending on what type of off-book instruction. For example, you have university-run ones such as UF Online, and this has some kind of a standardized UF-wide department share of the revenue. You have college-run ones. College of Business has a very large program like that. We have the EDGE program in engineering. These have some kind of within the college standardized department shares, and that's something decided on by the dean, and dean presumably with shared governance by the college councils, and the department, there are department run ones as well. Both of these need approval from the university, and then the department sets some kind of policy and keeps the revenue. In all cases, the instructor writes on his or her instructional material is governed by the collective bargaining agreements clause on intellectual property. And it should be noted that in general, off-book instruction is not considered part of standard education in general, which is not part of the general tuition revenue stream. And also, this entire slide only concerns in-load off-book. There's also optional overload in each of these categories, depending on the particular program. And so one would hope that there's a standardized overload policy at various levels at the department, college, and so forth, and the university, that are paid directly to the individual instructor. So altogether, we have all these different types of revenue. We have the state appropriation and tuition together that form the E&G, and tuition primarily generated by the departments, state appropriation coming from the college, from the university, to the university from the state, but in some sense generated by the university. And there's the the indirect cost and the direct cost on grants plus the intellectual property. Then you have the spendable donations and the off-book instruction. The way they're allocated is a mess. So we have the clear budget allocation model from 2016, which is easy to compute. That can be computed for any unit based on the initial E&G allocation plus the tuition revenue generated by any unit, college or department or whatever, by a simple formula. And an easy way to do it is simply use any particular year's total E&G allocation and add to it the tuition that was generated in the most recent year, and subtract from it the tuition generated from the year before that, and that tells you the new E&G allocation for that year. So you don't need to know the absolute value, you can just compute it from the relative value and relative change in tuition. So that is really what the revenue, in terms of the revenue generated by your unit. However, what's allocated to you depends on what the dean decides to do. So in any case, you can compute the difference between what your department generated according to this formula, and it's according to that formula that the university gives the colleges the allocation. So you can compute what your department would get if the university had directly allocated to the department, and you can compare that with what the dean allocated to the department. So all these other revenue streams are somewhat more standardized, and the grants go directly. Intellectual property schedule we just saw. The off-book instruction depends on which program of off-book instruction. The spendable donations go directly to whichever unit the donation came to. Sometimes it comes to individuals as foundation grants and gifts. Sometimes it comes to departments, and sometimes it comes to colleges, and sometimes to the university, and it just goes to whichever it is. So this is the full picture. Just show more like a pretty picture, but it's meant to show the complication of the allocation side compared to the relative simplicity of the revenue generation side. So now we are ready to walk through some of these portals and snapshots that are available on the Budget Council page, together using the tuition revenue snapshot by department and the allocation and expenditure by department. You can compute what the tuition revenue or E&G revenue generated by your department was, as opposed to the amount that was allocated to your department. This document is just there to ensure that the portion of the tuition revenue that depends on the majors that are attributed to your department is correct. So in other words, if you find in this document some mistakes as to which majors correspond to your department, you can contact the institutional research to get that corrected, or ensure that your college contacts the institutional research to get it corrected. So this is the tuition collected by the department document. So this can be found at the Budget Council page. As you can see, you have colleges, agriculture and life sciences, arts, and so forth. And within the colleges, you have the departments. And for each department, you can look up the total amount dollars that was tuition dollars generated by that department from undergrad and grad 1, which is master's, and grad 2, which is PhD, and in some cases there are other professional degrees, which is this column. So this tells you the in-state portion of that, and this tells you the out-of-state portion of that. So you know the undergrad and grad out-of-state tuition is significantly higher than the in-state tuition. So this document, you might ask, how is this dollar number generated based on the student credit hours? So to do that, to explain that, you should remember that the way in which the department's tuition revenue is calculated is you take 70% times the number of SCHs taught by the department times the tuition dollars corresponding to per SCH at that level. If it's SCH at an undergrad level, then it will be multiplied by that number. If it's a grad level, it's multiplied by that number, etc. And 30% comes from the SCHs taken by the majors in that unit, regardless of where they take the SCHs. So there could be a student in a particular unit that takes SCHs in a different unit, provided that student is a major of the first unit. Then 30% of those SCH revenue goes back to the unit in which that student is a major. So this is how the tuition revenue is computed. But the way in which you might get allocated, that the amount that gets allocated to your department will differ based on your college. But this is how the university computes the tuition revenue generated by your department, and altogether, all departments together, the total tuition revenue generated by a college. So in this picture, this dollar amount was computed in that fashion. So you can go here, and in your department you can look up, okay, this is the total amount that total in-state amount that my department generated, and this is the total out-of-state amount that my department generated, and this is the grand total dollars that my department generated from tuition. So if you wanted to compute your E&G allocation, had it been directly allocated from the university instead of going through your college, would be to look at the E&G allocation for the previous year, add to it the tuition revenue from the previous year, and subtract from it the tuition revenue from the year before that. Once this is all added up for the college, so all this is added up for the college, so this is, for example, the total amount for the college is on this column, and so that's the amount that's allocated to the college. It's completely based on all the teaching and all the majors done in the department. The other important thing is, because there's the 30% that comes to your college based on the majors of the college, or in particular majors of the departments in the college, you have to understand that the department major correspondence is an important thing. Right? So there's another document which shows you what the department major correspondence is, and there may or may not be mistakes in this, but if there is a mistake, that will make a difference to how the tuition revenue was computed. So in order to check, you can go to another document also available at the Budget Council page, which lists for every department all the different major codes that correspond to that department, that are attributed to that department. So if you find that there is a mistake in here, the person that you should be reporting it to is, so this is maintained at the Institutional Planning and Research, which is Marie Zeiglin, zeiglin@ufl.edu. I would suggest that you contact her, copying your department chair and copying your college as well, so that inaccuracies can be checked and corrected, right? So we have finished the walkthrough of the snapshot of tuition revenue by department. We have finished the department major correspondence document, which is required for full computation of the tuition revenue. And now we're going to the walkthrough of the portal that actually shows the allocation to the department by the college. First of all, the allocation to the college by the university, and then the allocation to the department from the college. So this is the portal, which you can again arrive at from the Budget Council page. The leftmost column lists all the colleges. You can pick your college. So in other words, the rows or sets of rows correspond to colleges. So this entire set of rows correspond to colleges. This row is split into sub-rows, which talks about the total amount that was available to the college at the beginning of the fiscal year, the revenues that were accrued by the college during that year, we'll talk about that in a second, and the expenditures during that year, and any commitments, and the balance that's left. The columns here correspond to the different revenue streams that we talked about. The first is the E&G revenue stream, what is allocated to the college from that revenue stream. Remember, that was exactly according to that formula that we talked about. And these are the this is the carry forward, which is the amount of balance in this revenue stream from the previous year that gets carried forward to the next year. The grants column is a little bit different from the other columns. The grants are life to date rather than year to date. So at the top we see the total amount awarded on all of the grants that are currently active. So for example, you might have one grant that was awarded 3 years ago, it's still active, another one that's 2 years ago, still active, etc. The top amount is this total amount. The expenditures are also life to date. So in other words, all the expenditures on these active grants up to this point. And the balance is how much is available on those active grants currently. Same thing for IDC. The IDC, I believe, is year to date instead of total active. So this slide explains the table that we just saw. The rows correspond to colleges. The sub-rows are the starting balance, credit, and revenues. And year-to-date expenditures, except for the grants where they are not year-to-date, but rather active to date, and the ending balance. And this sort of explains what I just showed, which was the E&G allocation, which was the leftmost column, the carry forward, the next column, the IDC allocation, which includes IPs and licenses, and anything that is generated by individuals. Other revenues include spendable donations, etc. The grants convention is that the total of all active grants rather than year to date, including starting balance, expenditures, etc., except in that column, it's not year to date. IDC, etc., is still year to date on active grants. So just to remind you again that the allocation here is what we're talking about here. So the amount that the university allocates to the college, that's what you see in that portion, and we know the formula for that, and we can compute that by simply looking at the last year's allocation and seeing the difference in the tuition, basically, assuming that there were no raises or cuts. And however, what you gets allocated to the departments is different, and we'll see that in a second. So we go back to this for a second, and we can see that this is the allocation to this college. Basically, this is the last year's leftovers on this ENG revenue stream. This is the total active grants balance. This is the IDC balance on, this is not just based on active grants because IDC does not expire. And the revenue under the IDC column is generated as a proportion of the expenditures on the active grants the previous year. Other funding sources, which we'll talk about in a little bit. So this includes spendable donations, it includes also off-book instruction, and all of these other revenue sources. So, and everything is year to date except for grants, direct cost on grants. The first drill down view within each college, and so where you can actually see the same items, ENG allocation, carry forward, IDC allocation, etc., for each department in the college. And you do that by going to the college thing and actually clicking on the college. When you click on the college, you will arrive at the department view, which looks more or less the same. So you can look at a particular department, and in that, so all the rows correspond to departments within a particular college, right? So you come to the, you can look at this row, and you have sub rows that again correspond to what was the balance at the beginning, the revenues, the expenditures, commitments, and the balance at the end, so of the year. And the revenue categories or the revenue streams are still the same. So this is ENG, which is the budget that's allocated to the college, allocated to the department by the college. So this does not follow necessarily the same formula that we talked about, the 70-30 times SCHs, but it depends on how the dean decides to allocate. So this is how the money is generated according to this formula, but the weights allocated may be different depending on how the dean decides to do it. The IDC column in the department view contains revenues that are generated based on the expenditures of the previous year, grant expenditures of the previous year. Additionally, the IDC revenues contain a transfer of the individual PI's overhead balances that the PIs use as a rainy day account, the 10% that comes from the IDC generated from their grants. So every year, the balance of the individual, the sum total of the individual PI's overhead account balances enters as revenue, as a transfer, and also appears in the expenditures as a transfer back. So it just circulates through, as comes in as a revenue and leaves as an expenditure, which is why you have such large numbers appearing under the IDC revenues and expenditures in this view. So one thing to note down, to notice is that the IDC allocation also includes IP licenses, and other revenues include spendable donations, off-book instruction, etc. that belongs to the department. So again, I want to remind you that the allocation from the university to the college, namely the previous view, in this view, can be obtained directly by the formula. However, when you go to this view and look at what is allocated to the department, it may not follow that formula. So the difference between these tells you whether the department is being subsidized by the college or whether the department is subsidizing another department in the college. So in other words, the difference between the amount that your department generates in the tuition revenue snapshot this one. And so this is the total tuition revenue, and the difference between 2 years plus the budget of last year should tell you how much more your department should get this year, how much less. The difference between that and the amount allocated to your department tells you essentially the extent to which your department is subsidizing or being subsidized. So this should help the faculty monitor whether the college's stated long-term strategic plans are consistent with whether your department is subsidizing or being subsidized, and to what extent. So the second and third drill down views tell us, once I am at the department level, I can click on the department here and get a detail of the expenditures and detail of the different subunits within the department and their expenditure detail. So when I click here, I will get the second drill down view, which shows me the different subunits within a department, and within each one of the subunits, the different expense categories. For example, faculty salaries, staff salaries, TA, OPS salaries, the waivers, which are treated as dollars. In other words, if a student is not required to pay tuition, the amount that the student would have paid is considered an expense. So the waivers appear as an expense, and the travel expenses here. So these are the different expenditure categories that you can look at. So we can look at the second drill down view, say this the expenditures, and as I said, sometimes the expenditures can include transfers. For example, 10% of the PI's IDC can pass to the individual's PI's individual overhead account, so that might show as an expense because it comes into the department's IDC revenue stream, but then eventually passes into the PI's account. The third drill down view is essentially, if you click on any one of these, it gives you a detail of the different subcategories within this revenue category. So for example, this is the E&G budget category. So this has the different within E&G different funding streams. For example, the UF Online is officially treated as a different funding stream from E&G. I had it classified almost under off-book instruction, but in fact it will eventually become part of the E&G budget, so it appears here as a separate category. The preeminence, which currently appears again as a separate category because it came from the state as a separate part, but eventually will get merged all together. In any case, all of them appear together as the total E&G budget for the department. This was the IDC. The IDC has 3 subcategories. The IDC revenue stream has substreams. One is the returned overhead, and this is the IP revenue, technology and licensing revenue. We can go and look at other funding sources. It can sometimes take some time while the report is running. So here, for example, you have in the other funding sources within this department, you have off-book revenues, for example. This is the spendable balances on the donations. Revenue categories, the subcategories within the revenue category, we have other revenues including donation spendables and off-book revenues. Okay, so that concludes our faculty guide. As I said, all of them can be found, all the 3 portals can be found at the Budget Council page, which contains these 3 snapshots. This is the tuition revenue snapshot, tells you the tuition revenue that's generated by your department, taking the difference in tuition between last year and this year and adding that difference to the allocation that you computed for your department last year. And in order to compute this, you need to double check that the department major correspondence is accurate, We have found inaccuracies, and these do happen. It's a natural thing that they happen. So it's one of the reasons for this portal, so that faculty can report such inaccuracies to the Institutional Research Office. And finally, the UF Transparency Portal, which is simply the budget that's actually allocated to your department, to your college and to your department, which you then can look at the expenditure categories and subcategories within the revenue streams. So that concludes the presentation.